Hello, everyone. Hope y'all doing well. I would say normally that sometimes it's it's better not to trade, But this time I just didn't enter, but I have the perfect setup. Because I was trading the S&P 500 today, the 23 of September, and I was only waiting for a higher sweep. I was just, I was just waiting for these equal highs to get swept by a wick. I was like, okay, it's gonna come back here again because I see a lot of this, a lot of consolidation, and then price goes a bit up to get the the all the orders filled of the equal highs. We got like four consecutive equal highs here. Look, it's all lined up perfectly. I was only waiting for that, honestly, you know? But it went close, and I waited all that. And then I just put my risk to reward tool here, right? I just put it. Um, and then I was just waiting for like a pullback towards these levels to have a high entry, high reward entry, a good entry, of course, and with a risk reward of 2, and I was targeting this uh, this this low right here. Of course, makes sense. Low it created at 7 a.m. and yeah, it hit well. So I entered because, as you can see, I didn't enter, but like I looked for a trade over this time period because I know that it was gonna hit properly. But as first thing first, we can see an inverse. I marked out this inverse first. Then I saw that. As you can see, I marked this inverse fair value gap. I marked this fair value gap. Bearish, of course. And then we're gonna talk about the new ones that the price formed. Oops, I just removed my indicator. Oh, that's not the right one. There you go. So we're gonna remove that one. We're gonna mark out this inverse fair value gap that could have been used. Because what do we see after this one? We see a break of structure towards the downside. So uptrend here, and then it becomes a downtrend. So the inverse creates prior to the break of structure is important. That's why, yeah, you see price rejecting this level with the wick touching the 50% line of the inverse fair value gap. It's very interesting. It's very interesting. As you can see, price bounced on it, but like created an inverse after. But yeah, that's pretty much it. It hit very good. I just didn't enter. Like I was just waiting for a wick to sweep those highs. But that was the exact trade I would have entered in. Like my risk reward was here. My 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 take value and all was like set up. I risked 250 per trade for 500. Like I do 2 RR the most of the time, and we can see that it was consolidating kind of towards these levels because I was looking very precisely, as I was searching for that sweep, and as we can see on the Nasdaq, it went above the Asia and London low. that shows that sellers were taking advantage here. A big bearish momentum, but S&P 500 had much more power. I mean, they stayed above the London and Asia highs um, more consistently. And then we can see that it reached my take profit. It's very unfortunate. As you see, I'm still 979 up on my funding account, approaching the 1K. It's only the evaluation, so looking forward, I'm treating it like a past account anyways. Like I'm patient. I don't over risk. I'm chilling, honestly. I already have everything set down for the real phase of the funded, but now it's only evaluated. But it's fine. I mean, it's fine. There's nothing I can do. Now I'm just very happy to have seen my setup play out. Yeah, very very basic and very well, very well. That's pretty much it. Thank you very much for watching my video. See you.